Hey, it's Mike Hambright from FlipNerd.com. Welcome back for another exciting Flip Nerd VIP interview show. Today I'm joined by Marck De Lautour, who is a Kansas City-based real estate investor, and he owns SBD Housing Solutions, which is a turnkey rental provider, among other things. He's going to share with us how to build wealth through real estate, and we're going to talk about turnkey rental investing and what that means for you and how you can build wealth. Before we get started, though, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, Mark, welcome to the show.
Hey, thanks for having me, Mike.
Yeah, glad you're on. So, for those that don't know you or are not familiar with your company, why don't you give us a little bit of background on how you got started in this business and kind of where you came from. You didn't come. I can tell by your accent that you're not from around these parts. So maybe share
That's right. I'm a Kiwi, so I'm a native New Zealander, and I came over to America originally on an athletic scholarship to play collegiate tennis. And I studied at UMKC, University of Missouri, here in Kansas City, and got my MBA in international business management. Not really knowing, which way my career path would go, but I always had that entrepreneurial flair, kind of wanted to do my own thing, wasn't really just going to go into the corporate world. That was never my bag. But I read Rich Dad Poor Dad in about 1999, and that kind of really focused my interest in real estate, and realized that probably is where I was going to go. And obviously that was the first book of many that I've read since that time. As you know, you start delving into all these different books to learn more and more and more. But that was kind of the thing that kick-started me. I did one flip while I was still working at an advertising company, and made some pretty good money accidentally, really. I mean, I didn't know what the hell I was doing back then. But now, fast forward to 15 years later, and we've now, done hundreds and hundreds of deals in the Kansas City market, and we're the predominant supplier of that pre-foreclosure courthouse steps auction houses that we buy.
Okay. And before we talk a little bit more about turnkey rental operations and why that makes sense and where that's going, talk a little bit about buying on the courthouse steps, because I think I don't personally do it. I know some folks that have done it really well. My impression is that that's an opportunity that kind of comes and goes. And what's the status of that right now? My understanding in some parts of the country is that there are less foreclosures going on because banks have found other ways to liquidate those houses, whether it's through short sales or selling to hedge funds or things like that. So kind of talk about, just generally speaking, the courthouse steps opportunity as it is today.
Yeah, it's certainly very competitive. As most of your viewers that have been to a courthouse steps auction, they know that there's a lot of people there. What we've specialized in is really kind of taking advantage of what is a very inefficient way for banks to distribute their assets. Keep in mind that you have 50% of the states are non-judicial, and then 50% of the states have a judicial proceeding, and Missouri is one of those power of sale states, or a non-judicial proceeding. So we actually don't even operate in Kansas. So even though we're in Kansas City, we're on the Missouri side of the state line and operating in eastern Jackson County. The misconception is that when banks are selling to hedge funds, that means that there's going to be less action on the courthouse steps. In Missouri, every house that gets taken back by the bank must cross the courthouse steps first. And so when we have those opportunities, the volume certainly has not slowed down for us at all. For a while there, I would say probably in 2002 through 2005, we were really having to chase hard just to get the full debt type, people that just owed less than what their home was worth. Right. But then once 2008, 2009 started hitting, the banks just started drastically discounting the opening bid. So you might have a home that was worth 150,000 in today's market, and they were owed 150,000. So there's no equity, but the gap that we were able to pick up and the equity spread came in the fact that the banks were discounting the note or the opening bid down to say, 30 or 40,000 on the courthouse steps, and that's where we would jump in and bid it up to, what we would deem still a profitable margin. So the discounting of the houses on the courthouse steps was a way that the banks were purging real estate and continuing to do so.
Okay, and this could be different by state as well too. I'm not sure. Is that the same for FHA loans? It's been my understanding that FHA loans had to open at what the payoff for the loan was. They couldn't discount it down, but maybe I'm wrong on that.
No, there are opportunities in all facets. It depends on who the end bank is, and obviously with FHA, that bank, they're the guaranteed ones that get bought back. So a lot of the FHA stuff doesn't, but there's still a lot of there are a lot of product out there that is getting discounted down from the Chases, Wells, Litton Loans, Auroras, all the big banks that are out there needing to quit taking back all this real estate. So it's still a very viable source. I mean, we've gone from buying 30, 40, 50 houses a year to we're buying 100, 120 houses a year. I mean, there's huge volume out there, even though what the perception is that the volume is getting shorter.
Right. And so talk just to kind of stay on buying at the auction. In my world as an investor, we look at every house, we kind of analyze it to the detail of what we think the repairs are going to be, and we're able to do a pretty good job because we can usually get inside. So when you're buying at the auction, usually most of the stuff is sight on scene, at least from the interior. Talk a little bit about how you get comfortable with making estimations on something that you can't see.
You bet. That's a really good point. And that's essentially the only risk that you have when you're buying on the courthouse steps that's outside of what your normal risk would be. We get full title reports, so title is never a risk issue for us. So that's your big barrier to entry for people that are novices. But I would challenge you and say, pretty much every house we go into is going to have a full interior remodel, which is going to be in that 17 to 20 grand, because it's going to be the carpet paint, appliances, bathrooms, a little bit of granite in the kitchen, travertine tile, and you're done. So, but the big budget busters are your exterior items that you can see. It's the windows, the roof, the siding, the foundation. Those are the things that you can see from the outside. So we basically factor on worst case scenario for the interior and are pleasantly surprised sometimes, rather than hoping to get lucky and then being disappointed. So you just plan for it, and if you get lucky, then great. And if, but again, a lot of times you're finding properties that probably 50% of the time they're vacant. They've already been winterized by the banks. To be frank, the banks are not totally creative in the lockbox combinations they use. They use like the same 3 every time. So, I mean, if a property's vacant and they got a lockbox combo already on there because the bank's got it, then, as licensed real estate agents, we'll get inside the home, take a look around and try and get, just like you do normally. But when you can't get inside the home, it's factoring on worst case scenario and then, hopefully getting pleasantly surprised.
Okay. And you guys just run a major ground operation of trying to get around to all the houses that are coming to auction in case it's something that you end up bidding on. Because a lot of times, I mean, it's a numbers game, right? There might be a lot of houses that you believe are coming to the auction, and somehow the issue gets resolved before the auction happens. So you're looking at a lot of houses.
A lot of houses.
Hopes to bid on a few, right?
Yeah, you got it. And so one of the things that I did, and again through a book I read called by Timothy Ferriss called The 4-Hour Workweek.
Yeah.
I've actually got 2 VAs that work in India for me, and those have been essential components of our operation because there's just copious amounts of foreclosure data that comes streaming through, and you need a full-time agent to just be able to just pour through that data. And so I've got 2 guys that work for me over there that are just pouring through this data all the time, updating from the 10 or 12 different foreclosure attorneys, compiling that data with the research from MLS and doing comparable analysis. And so we are very much behind a computer for 80% of the time and only go out to the property when you're doing your final analysis. So we know pretty much that we're going to buy the house before you even go to the house. I mean, because the numbers are going to be somewhere around a $20,000 remodel, 25 maybe. And so if the numbers work, they work. And it's very seldom that we will go out to a house and waste my acquisition manager's time without knowing, a lot about it. Because that's the cool thing about investing right now. We're in a world of Google Docs and Google Maps and VAs and comparable analysis right from your desktop. I mean, you shouldn't have to do much traveling with Google Street View. I mean, you can see every house in the world right from your desktop. So it's a different way of real estate investing right now.
Yeah, no doubt about it. I'm actually having to be leaving tomorrow to go on vacation for a couple of weeks, and I'm closing on a couple of deals this week, and I know exactly how it's going to happen because I know when the closings are. We're going to be going down the interstate at 80 miles an hour, and I'm signing closing docs on my iPad.
There you go.
Either wiring money or receiving money that I can do from my Chase app on my phone. I mean, it's crazy.
Yeah, wonderful.
Yeah. So talk a little bit about how you went from the opportunity in your mind, like you saw an opportunity to be a real estate investor, and somewhere that moved into being a turnkey provider for other people. So talk about kind of that transformation of realizing that if I get other people involved, I can do more volume and make more money.
Sure. And so I started off, and I did, when I first got started in 2000, flipped one house. 2001, I did 3 houses, and then slowly grew. I mean, I was fortunate where my wife was working at the time, and so was able to really support us, so that you do have, because obviously in real estate you just get paid in chunks.
Yeah.
So that helped a lot. You start off very, very small, just doing 1, 2, 3 deals, just a little mom and pop operation. Try and do a little bit of work myself, and then you hire out what you can't do when you get the second house or the third house. Then I was approached by an individual who is extremely wealthy and said, "Hey, why don't you scale? You're getting these phenomenal deals. Why don't you scale the operation?" That led into a partnership that was good for about 6 years. And then the old Dave Ramsey quote: "The only ship that never sails is a partnership." We sailed for about 6 years and then sunk. So it was just an instance where it was an unfortunate circumstance that kind of led to the downturn in that business partnership. If anyone out there has had a business partnership that went bad, it never, it ends in divorce. But I still, I was the operational guy. He was the money guy. At that time, we had, grown. We had a large pool of rental property and that were cash flowing. Those got put on the shelf. And then, but I was still, out of a job. Basically, I'd been buying for this entity the whole time. And I had a great method of buying and acquiring properties that would stand the test of time. And so I simply, at that point, because I was not at the point of being financially independent where I could go and buy as much as I could for myself, I sat back and looked at the model and thought, I have a lot of people that always approach me and say, "Hey, if you ever see a deal that, that you maybe can't, pull the trigger on financially wise, let me know about it." Well, up until that point, we'd had unlimited financial resources and I'd never had to go there. And so finally I had all these people that would say, "If ever you had the opportunity." And I did. I went there and said, "Look, here's my model. If you've been buying, on the MLS at $100,000, these assets that you've been buying, if I could bring them to you at $70,000, you could pay me a fee. And to do so, you take the house, you take the asset, it's all in your name to give you the comfort. Would you be interested in doing so?" And slowly that morphed into the very sophisticated business model that it is today of buying for other people. So, obviously the contracts and everything that gets put in place. But it simply started with just going to those associates and friends and family that had said, "Hey, I'm looking to build a rental portfolio and I value your expertise," and kind of leaning on them to get me started.
Yeah. So talk in a little more detail about, for those that, aren't terribly familiar with the concept of a turnkey rental. And I have had other turnkey rental providers on the show in different parts of the country. They usually have very different, there's several very different business models, whether they stay involved as a property manager or not, whether they ever take ownership or not. There's a lot of different ways, but just talk about, I guess, a little bit more detail about how your model works, and then just a little bit more about how that works for the customer that you're serving, like why that makes sense for them, and kind of mix in some of what we've talked about before we started recording about how people are kind of dismayed with the stock market, and there's this movement towards real estate becoming a true Main Street investment product.
Yeah, you got it. First, I'll start off by saying, part of the inspiration, I guess, or the vision of my company was that I felt the real estate industry for the longest time has done a very poor job of catering to an individual who wants to invest in real estate. Yeah. If someone who has, a couple $100,000 or a paid off home or a line of credit or just some cash they've been saving up, they're sitting down with a financial planner, and the financial services industry has done a phenomenal job of marketing to these people. So you've got the UBS, Edward Jones, Payne Webbers of the world that are out there, aggressively pursuing this capital to go invest. And the real estate industry does not do that. So my model was simply trying to cater to those people to say, hey, look, in the same way that you can give, $500,000 to your financial advisor and know that it's going to be professionally managed and well taken care of and, buying quality assets, the same can be said of real estate. And that's where we've found our niche, is buying directly in their name, which is we'll get back to, but is a very different than most turnkey providers. But we find them an asset, we rehab it for them, we get it rented out, and then property manage it for them. So they literally, most of our investors are international. It's only recently that we've started to grow our domestic clientele. But, in 2007, there was a huge, right when everyone in America was screaming, I'm worried about this real estate market, everyone in the international were saying, hey, we've got a weak US dollar and a weak US housing market. Let's go in and double dip. And so that's where I found my initial niche was, getting investors from Brazil and China and Hong Kong and UK, South Africa, Australia, New Zealand that were wanting to put in some cash into the US market and just giving them a source to do so.
Yeah, America was on sale for many years, and people here were scared of it, but everybody else realized there's an opportunity there, right?
It was a huge transformation of wealth, back in from 07 to 2010 that a lot of people took advantage of. So and then further to that, the difference between us and most turnkey providers is that most turnkey providers will buy a house, rehab it, get it rented out, and then cut out the margin and bring it straight to the investor saying, hey, you're going to make 10%, it's already rented out, and here you go. The difference is with us is that we go direct to the courthouse steps, buying it in the investor's name. So not using our capital to do so, but at the same time, there's huge equity there for that investor, and they get to share. So if we get a day when nobody shows up at auction, and we were going to bid that property from $30,000 up to $50,000, where at $50,000 was still a great deal, the extra $20,000 just goes straight into their pocket. So that's a significant difference. And then, the security that comes with, owning it directly, you have massive equity increase as well as guaranteed, the cash flow on the back end. So right. It's been a popular model, and one that, has been able to help build wealth for our clientele. I always say to people that real estate is a crockpot business, not a microwave business. You don't just, buy and flip and take a little bit of money and pay taxes and To me, real estate is the way to change your life pattern, your family tree, is to buy and hold real estate. I know you're a big believer in that. You've got a lot of rental property yourself, as do I. And, the key there to change your family tree is to buy and hold. And it's, the whole, delayed gratification is a sign of maturity. I think mature real estate investors are those that aren't just looking for the quick flip, but are those that will buy and hold and invest it for the long term, knowing that, the power in real estate is having, 20, 30, 50, 100 paid off pieces of real estate in 20 or 30 years time that is massively life changing.
Absolutely. Yeah. I don't think there's a real estate investor in America that has done any level of, decent volume that doesn't look back right now and wish they had kept more houses as rentals.
Yeah.
So there might be a few, but those are usually people that have some horror stories with rentals associated with it. But so I haven't really talked to anybody about this, but and this could be an entire show, but just talk a little bit about the tax implications for international investors, because, one of the biggest benefits that that's usually associated with rental properties, it's appreciation, it's cash flow, and there's some tax benefits and associated with depreciation usually. So talk a little bit about how that's maybe different for international investors that pay taxes differently based on whether they're a U.S. citizen or not.
Sure. Well, and actually, the interesting thing is that they're largely actually the same benefits. So we set them up with a local Missouri-based LLC. So the LLC takes ownership to all of these properties. It's never done in the individual's name. And those LLCs have the same rights and tax benefits. So it's really a corporation that's set up here locally that has all those same benefits. And then each individual investor obviously has their intricate. So a lot of them, we deal with a very high income, high net worth clientele, as you can imagine, everyone paying, millions of dollars of cash for real estate. And so most of them, a lot of them have USD as a source of investing, and they don't want to convert that US dollar back to, say, the South African or the Australian New Zealand dollar or the British pound. So they want to leave it here, and that's kind of their source capital for what they're doing. So they fund their LLC, and then they file a US tax return, and then the great thing with the US is, with the tax treaties, there's pretty much double taxation is done by gone by the wayside in 21st century. So
yeah. And so for folks, talk a little bit about your experience on the appeal of investing in America, the types of returns that people are able to get relative to overseas. I know I know some folks in New Zealand as well. I know there's a lot of folks there that just can't understand the types of returns or the types of price points that you can buy houses at in a lot of parts of America. And they're just enamored by, they can't buy cash flowing rental properties in New Zealand relative to here. And you can even see that inside of the U.S. There's a lot of California investors that buy in the Midwest and Texas and the Southeast for the same reasons. But I know it's even many times more exacerbated when you're comparing to a lot of international markets. So just kind of talk about the appeal that international investors have to invest in the U.S.
Sure. Quick story. One of my investors that I'm working with now, they've just set up their LLC. They're funding the account. The way they're funding the account is they have a couple of paid off pieces of real estate in Auckland, New Zealand. And I asked them, obviously in the kind of Skype conference call I had with them, have you invested in real estate before? And the response is, well, we have 2 rental properties and something. Oh, okay. Yeah, one of them's 2.8 million and one of them's 1.4 million. And I'm like, what? Yeah. How do those things cash flow? And they said, well, they don't, So they were going to leverage those and turn around and send the money up here and buy far more property with that.
Sure.
But, their play there, obviously, is the speculative Auckland market, where Auckland real estate, for those that are in the know, is just going through the roof, and there's a massive shortage. And so it's a great play for them to hold on to that real estate. But having said that, completely different market. Another point of clarification that I should point out is that a lot of people, when they think of Kansas City, are those, maybe $15,000 to $20,000 houses in the inner city, and we do not buy anything in the inner city. No war zones or bad zip codes. We actually specialize in really quality first-time home buyers type housing. So, although there is some really strong, we have some California investors calling up saying, we want that 20 to 30% yield, and I'm like, yeah, we don't do that. That's not what we deliver, because we're not buying something for $5,000. Sprucing up the turret and getting it rented out Section 8 for $500. That's not what we do.
Right.
So we do a quality real estate. Typically in that $100,000 to $180,000 range is our niche. And then that average purchase price somewhere in that $50,000 to $60,000 range. So 50 cents on the dollar. So couple that with a quick quality remodel done extremely cheap and cost effective. The yields that we're delivering here are double digits, that 10 to 14% yields with significant equity of 20 to 30%. And like you say, that's just stuff that you can't get anywhere else. We're fortunate that, in the Midwest, specifically Kansas City, we're not landlocked in any way whatsoever. If a farmer wants to sell to a developer, the developer will go out, he'll buy some land from a farmer, he'll put in a swimming pool, some walking trails, a playground for the kids. 500 houses later, he calls it a subdivision, and he sold those lots that he bought for $1,000 a lot. He's selling them for $30,000, and
right.
It's a good model. There's, the city's growing north, south, east, west, tons of expansion. Kansas City's growing extremely well and has really withstood the test of time. Now, appreciation-wise, it's not the greatest play ever. But again, that's the key to our model, is just buying cheap than anyone else can buy. If the curve is here and you're consistently buying, under the curve, it doesn't really matter what the market's doing. You're consistently buying under, and whereas the Florida and California markets are doing this, Kansas City's kind of just the slow little 4 or 5% movement either way. So largely insulated because of our diversified economy here.
Yeah, and I think you say that for most of the Midwest, and a lot of Texas is like that. It's just there's not big ups and downs, but it's just a stable market that you can count on. So, well, just want to talk about one more thing, which is where you think Turnkey is going from here. That's kind of gotten hot, I think, as more and more people know that they can find ways to invest their IRAs or other monies in real estate and truly be more passive than in the past. The quality of property managers is going up everywhere because of their franchise systems and technology that's allowing people to kind of be there without being there, per se. So I know that real estate and rentals is becoming much more of a Main Street type product, even an institutional product, unlike ever before. So talk a little bit about where you think that trend is going and how that'll change one way or the other over the next 5 years, let's say.
Yeah, even more long-term than that, I think it's extremely positive. I mean, our company is based around the fact that I believe what is needed in this marketplace is a professionalism coming along with not just, I mean, property managers have always been professional and real estate brokerages are extremely professional, but there's never been that crossover, that company that's willing to step in and say, we need a turnkey approach to this, and that's something that is all inclusive. Even the turnkey providers really are ones that, they'll go buy an asset, they'll rehab it, and they'll take their margin and move it, onto another investor and then wash their hands clean. We stay involved in the property management all the way through, the entirety. And so I think those kind of professional approaches to real estate investing in the turnkey will withstand the test of time and will continue to grow and do well. The other thing that I believe strongly is that technology is only helping real estate. The world is getting so small. I mean, all my family's back home in New Zealand. We jump on 2 planes and we're there in, about 20 hours, which really, you're flying halfway around the world now. And the comforts of modern, jetliners are such that you can just get there in no time at all. It's extremely easy. People travel here. They realize that, you're no longer bound by geography. You can invest anywhere in the world and be totally comfortable doing so. The trade walls are falling down, and foreign investing is encouraged. And for those that are willing to take that chance and find a trusted partner, will reap the rewards.
Great. Well, Mark, for folks that want to learn more about you and SBD, where should they go?
Sure. Our Facebook and our website would be good starts. Facebook.com/SBD Housing, and also SBDhousing.com. Strength by design, synergy by design, SBD. So.
All right. Awesome. Well, hey, thanks for sharing your insights and your information today. We definitely wish you all the best.
Thanks, Mike. Enjoyed it.
All right. Stay in touch. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry. So get on over to FlipNerd.com.